San Ramon continues to prove its desirability despite the market slowing down. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, August 2nd. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Let's start off this week by looking at how the market performed. There are the same number of homes on the market this week as last week, 55, and the average asking price for those homes is about the same at $1,967,000 compared to $1,958,000 last week. Again, same number here, pending homes. There's 12 that went pending this week, same as last week. And with an average asking price of those pending homes at $1,750,000 compared to the average asking price of last week's pending sales at $1,969,000. And 7 homes closed this week, which is 2 fewer than last week. What's more notable is that the average sales price of those homes dropped about $400,000 or more, 500 almost, $1,812,000 compared to $2,294,000 last week. So that's how the market performed this past week, and now we can look ahead at what the broader indicators are telling us where the market might be heading. Before I do that, if you find this information helpful, why don't you hit the subscribe button down below so you don't miss out on future updates. And if you do find this information helpful, you could share it with a friend also. Everyone deserves to be in the know about their local market and how it's affecting them. All right, let's take a look at those broader trends. Starting with inventory, it has obviously remained at 55 this past week, and that is the same number it has been at for the past 3 weeks. While it's slightly higher than the standard inventory levels we normally expect, the fact that it has not continued to climb is a good sign. What that tells me is that either there is still enough buyer interest to keep the inventory down, or that homeowners are seeing the slowing down trends and deciding not to go onto the market. Homes are still taking a little bit longer than we are used to seeing to get offers. The average home takes about 25 days or less to sell, as opposed to the 10 days we are accustomed to seeing in the average days on market. With inventory remaining at the same level, that is giving the turnover rate a chance to rebound from the low of less than 50% we saw a few weeks ago. The turnover rate currently sits at 64%, so it's still lower than a neutral market, but it is slowly improving. With the turnover rate below 100%, that usually gives buyers a little more flexibility and negotiation leverage. The interesting thing about the over-under stat is that it has started to creep back up over the past couple of weeks. It was averaging about 30,000 over asking a few weeks ago, but now is about up to over 40,000 over asking. It did come down a little this week, but considering how the turnover rate started its descent below 100% more than 6 weeks ago, I would have expected to see this over-under number dropping down to the under by now. It could still hit the under in a little bit, but what this leads me to believe is that despite the slower market, a well-priced and well-staged home can still generate a lot of interest, and we aren't in such a slow market that it's impossible to generate a little bit of a bidding war if you're pricing the home right. Along with the over-under trend, the average sales price increased this week as well. It jumped up $10,000 and remains comfortably above the $2 million price range. This stat reinforces the idea that despite a slower market, home values are not being affected as significantly as you would typically see with a slower market. They may not be increasing like they were at the beginning of the year, but if you're concerned about a housing value crash, I don't think this this information supports the idea. See how it's leveled off even while the market was slowing down. Homes are continuing to sell, and the ones that really impress buyers are still moving quickly. The Triple Q had a bit of a confusing week this week. As we were preparing for the stats yesterday, the fund was up 1%, which this chart doesn't show, after a few weeks of depreciation. However, this morning, the entire stock market took a little downturn, and the Triple Q is now down by another 3% from last week, continuing the trend of the past couple of weeks. These aren't large swings, but anytime the stock market starts to dip, it causes a large chunk of the buyer pool to pause, as a majority of their cash to close is typically tied up in the stock market. Interest rates dropped a tiny bit this week, coming down 5 basis points from 6.78 down to 6.73. This isn't a significant decrease, obviously, and really won't have any substantial impact on a buyer's affordability. But what it does do is give some emotional relief. It gives hope that rates could actually start dropping significantly soon. Add fuel to that idea is this week, Chairman Powell gave hints that there might be a reduction in the federal interest rates in the next couple of months. If that were to occur, I think we will see a flurry of new buyer activity, even if the rates only come down by 0.5%. So what does all this tell us? For me, the overall takeaway from this week is that our San Ramon housing market is resilient. We have had several weeks of slower market movement, and yet our homes are maintaining value, and the days on market are still below 25 days. The current average is 24. To put that into perspective, the national average for days on market is over 40 days. And beyond that, the only city in the Tri-Valley with a lower days on market average is Dublin, where the average closing price is about $300,000 cheaper than that of San Ramon. We are exceptionally lucky to live in a city that prioritizes safety, education, and backs that up with quality community amenities. Everything about San Ramon continues to be a strong pull to buyers as they look to either enter the market or move to a community that promotes safety and growth. That also explains why home sales are down so significantly. Nowadays, with interest rates this high, homeowners aren't making those small incremental moves up in home size in their local area. So the only people selling are those leaving the area. And that just doesn't happen all that often because San Ramon is such a great place to call home. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions specifically about how you could navigate the stressful, confusing, distracting process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.